Yep.
Okay, well, like Shawn said, welcome back to Onria. We still have some people kind of pulling in here, so we're going to get started, though. We want to respect your time. I think we're right on the dot at 7 o'clock. So first of all, we noticed from the people registering that quite a lot of you, this is your first time joining, which always surprises me because we've been running these events for almost 2.5 years, I guess. And every time, no matter what, we always get usually half of the people coming out are brand new, which is amazing. We love meeting new people, seeing new faces, and we love that you are joining us. So welcome, welcome, welcome. That being said, you may not know who we are. So I always like to do a little bit of an intro so you have an idea of what you're getting into. And if you're like, oh geez, I'm in the wrong place, then you don't, no problems, you can exit stage left kind of thing. But to give you an idea of who we are, so Shawn, Allen, my name is Jenn, and we're investors located in sort of the Woodstock, Ontario area, but we invest all over Southwestern Ontario, so anywhere from Sarnia to Peterborough. And we've been doing this since 2005? 7?
Yeah. 2007.
Yeah. So a while. And we got started with flipping. We sort of, the joke is, people who know us, Shawn bought our first flip, not accidentally, but he didn't let me in on it. He, he went to a house auction and told me, I'm just going to go watch and check it out and see how it works. And then a couple hours later, I got a phone call saying, guess what? We bought a house. So that was our introduction to real estate investing. And over the years, we've dabbled in almost all the strategies out there. We started into rental properties, ran out of money real quick, and realized, flipping is a great way to supplement and bring in capital so that you can keep investing. So that's a little tiny tidbit about who we are. We started Onria because we realized in the London area where we are, there was really nothing like this type of format where you can bring people together. You've got some networking, but you also have speakers. You have, people bringing in their background, their experience, and their knowledge, and just sharing it. This is what we love about this community is it's very open, it's very friendly, and everyone is out just to help each other. So that's kind of the pillars of who we are. And I'll go over, I should mention, no matter what level of investor you are, whether you haven't even gotten started and you don't even consider yourself an investor yet, or maybe you just have 1 or 2 properties under your belt, you're still kind of new to the game, or you are doing this full time, no matter where you are on that spectrum, you are welcome here. This is your space. We're here to bring everyone together. And what I love about our community is that, like I said, we always get a lot of brand new people, a lot of people who haven't really gotten started yet. But we also have a ton of people in our group who are in that intermediate range, working their full-time job, but still have a portfolio of rentals maybe. And then as well, a community of, advanced investors who are doing this full-time like we are. So it's a really great mixture of people, and you get a lot of value out of surrounding yourself with different levels of people in this game. So welcome to you all.
And I think tonight's going to be, as you're saying that, it's great. The topics that we have tonight, the speakers that we have talking about the different things from how to pick a niche or how to pick a strategy, what you want to do, all the way up to sort of the other end of the gamut of, building out a business and trying to figure out how to take that thing to the next level, right?
Absolutely. So from this, I mentioned this is an opportunity for everyone to, I know it's online, so it's a little bit different, but please be vocal, be interactive, make comments, ask questions. This platform, this night is for you. So please get involved. Don't just sit back. As well, really take in everything you can. So mute off everything else, close any open tabs, silence your phone, really give this, this gift of 2 hours to yourself to really be able to focus. And the last piece of sort of what we're all about here at Onria, as my phone goes off, hang on, let me silence that, mother. There we go. Is to really, this space is for you to gain some encouragement and take action, because you can go to all the seminars you want, you can listen, read all the books, get all the education, but if you don't actually apply it and take action, nothing's going to change. So please use this time. You know, we're here to support you. We're here to help you. If you're not part of our ONRIA community yet, you can go into our Facebook page, and we have a business page, but we also have a group page where you can, you know, dial into others and ask questions and really get that support you're looking for. So that's about us. Okay, so what time do we have here? 7:05. Okay. Now, I do have one ask real quick before I introduce our first speaker. If you have attended this type of event in the past, or if, you know, tonight you get a lot of value out of what you've heard, I would like to invite you to please go over to our Facebook page and like it, as well as, you know, leave a review. Tell people what you got out of it. You know, if you did enjoy it, encourage others, because we are really trying to grow our community and offer this to anyone out there who wants that support and wants that education. So that's my ask for you tonight. Okay, that being said, since April, we have been hosting these events online. And after taking a break for the summer, we came back to Zoom, but it's a little bit different. So if you were with us in the spring, you may have noticed that it was a meeting format. This is now a webinar format, so you can't see all the other participants. And we have about 50 people joining us right now. I think people are probably still rolling in because we were almost at 100 capacity or at 100 registrations. So with the webinar format, there are a couple things to point out. One is you do have the chat, so you can, you know, if something makes a lot of sense to you, or if you want to add a comment, please, like I said, we want this to be interactive, so put something in the chat. If you have a question, you can put it in the Q&A section. And Bill, you were saying there's 2 different ways to do your Q&A. Can you go over that one more time?
Yeah, in the chat, if you chat to all panelists, then only the 3 of us or the 4 of us will see it. If you do go to all panelists and all attendees, so I can see some people have figured that out. So all panelists and all attendees, it'll say everybody will see it. So everybody on the webinar will see it. So if you just want to talk to us, all panelists and all attendees, everyone will see it.
Perfect.
So hopefully that helps.
Okay, thank you very much. Okay, so here we go. We're going to get started this evening. And I'm excited to welcome our first speaker. Elizabeth, we have been talking about you being a speaker on here for what, over 6 months, I think.
Yeah, we weren't sure what it would look like, but I'm super excited to be here.
Oh, we're excited to have you. So let me tell you all a little bit more about Elizabeth. So Elizabeth Kelly is an experienced real estate investor. She's been in the business for more than 15 years, and she has a passion for helping people achieve their financial dreams through the purchase of investment properties. She specializes in the acquisition and management of rent-to-own and multi-unit residential properties. And in 2010, her and her husband opened Sandstorm Management, which is a full-service property management company. They're now the largest rental housing provider in Kirkland Lake, Ontario. And Elizabeth, how far north are you from London?
Well, we had friends who drove up a little while ago, and I think it took them 9 hours.
Okay, so you're a little ways up there.
Yeah, we're up by Timmins. We're like east of Timmins.
Right, okay, got it. Elizabeth recently opened EK Consulting and Coaching to assist both new and experienced investors to plan, structure, and creatively finance their real estate portfolio so they can enjoy early retirement and leave a legacy for their families. So we are very excited to have you talk to us tonight about discovering your strategy. You know, how do you figure out which way to invest in real estate? How do you narrow it down? You're going to dive deep into that and give us some tips and direction. So we're really excited to have you with us.
Well, thank you. I really appreciate it. I'm very honored to be here, and I appreciate you guys inviting me and giving me the opportunity to meet a whole bunch of new people, because I looked at the list of attendees and I'm like, this is awesome. There's so many people here who I haven't met before. So I really appreciate the opportunity. Thank you. Oh, Tanya from Scarborough. That's where I grew up. Nice to see you, Tanya. Okay, so first of all, I love, Jen, that you said this night is for you, because I think one of the things that we do as investors, and a lot of times we think we're doing it well, but sometimes not so much, is we try and multitask. So, you know, we're listening to things in the background at the same time we're doing other things over here. And, you know, sometimes we try and do everything, but we aren't the greatest at it. So I think it's really good that you encourage people to really make this evening about themselves and to maximize the opportunity. I talk a lot to you new investors about being a sponge, because I think it's really important when we're starting out that we just absorb as much information as we can. And, you know, the second we stop learning, then, you know, our efficacy as an investor decreases pretty much immediately, I believe. So I'm going to share the screen. So are you able, Jen, can I share the screen? Would you be able to allow me to do that?
Oh, yeah. Hang on a sec. How do I do that, actually?
Maybe if you go to participants, you might be able to.
Yes. Oh,
Oh, no, you had it.
sorry. More. Bear with us, guys. I'm new to this. Let's just keep this on. Make you the host. How about that? Can I do that?
Yeah, absolutely. That would work really well.
Okay. There you are.
Fantastic. There we go. All right. So, welcome to choosing the perfect investment strategy for you. So a lot of times when we start out in real estate, we get a little bit overwhelmed. There's so much going on and so many different opportunities, and we kind of go, where do we begin? Where do we start with everything? So we're going to talk a little bit about the key factors, the things that you need to consider when you're choosing the perfect strategy for you as an investor. So Jen's done a great job of introducing me. I'm not even going to worry about any of this. We're just going to move right along. Every time I talk to people, I have a disclaimer. So I'm not an accountant, a lawyer, or other professional. The information that I'm sharing is strictly from experience. So I'm a very, very big believer in hiring the people who have the information to prevent you from making the wrong decisions before you make them, because in my experience, it's typically more expensive to undo mistakes than it is to do it right from the beginning. So I'm more than happy to answer questions and talk about things from my perspective and my experience. I will not be providing legal advice, tax advice, you know, any of those other fun things, because I know there's awesome people out there who can do that for you. So this evening, we're really going to focus on how to choose our ideal investment strategy. And I'm just going to look right now. I want to be able to see my chat. There we go. Sorry, bear with me here. Can you guys see the chat if I'm the host now? Do you guys see the chat, Jen and Shawn?
I can still see the chat.
Okay, but you're not seeing it on my screen, so this isn't going to mess up your recording or anything like that?
No, you're
it's not on
fine.
your screen.
Okay, perfect. All right. So when we're starting out in real estate, we all have a series of challenges, and there's sort of common challenges that new investors face, more experienced investors, and then sort of ongoing challenges. So this evening's presentation is a little bit more focused towards sort of new investors, but it would also be of use to people who, you know, you've sort of got your first investment strategy under your belt, or, you know, you've sort of figured out where you want to go, but you want to just do that double check and make sure that you're actually choosing the right thing. I was a trainer for Rich Dad Canada for 8 years, and it always amazed me how many people came in with sort of ideas about what each investment strategy entailed, what the pros and cons were, and what it would actually mean to be an investor in, say, for example, rent to owns. And they'd get partway into it and they'd figure out that this really wasn't what they were expecting. So a lot of what we need to focus on at the beginning is making sure we're choosing the right strategy. Because my belief is we want to focus on something and become really good at it. We want to become an expert before we move on to the next strategy, to the next, you know, shiny penny, squirrel running by over here, those kinds of things, right? So we're going to focus a little bit more for the new investors tonight and talk about the best strategy for us to pick. What's going on here? There we go. Okay, so most of the time, when we know better as humans, we tend to do better. So there's a lot of sort of fear when we're starting out in real estate. A lot of us suffer from fear, and sometimes it becomes an obstacle to the point where, you know, we're almost paralyzed and we have trouble taking action and moving forward. So I wanted to address how we sort of can work around that fear to get to the point where we're thinking, okay, now I'm ready to move ahead. I want to pick my strategy. Most of the time, our fear comes from the idea that if we make a mistake, that we won't be able to recover from it. So it's not like, you know, Jen, I don't know if you've ever had this experience, but you go to the store and you buy a pair of shoes because they look really nice. And you try them on, you're like, ooh, they're just a little bit tight, but you know what? I'm sure they'll stretch. And you get home and you wear them and your feet hurt and you're uncomfortable. And after a couple of weeks, you're like, yeah, these shoes are not going to be comfortable. This was a really bad decision. I don't know if anybody else in the group. Yeah, I think that's probably happened to all of us. The challenge with real estate is, hey, guess what? It's not a $200 pair of shoes. It's a, you know, $250,000 piece of property. So the idea of recovering from a mistake of that magnitude tends to be a barrier for a lot of us. But there's definitely steps that we can take to set ourselves up for success and to make sure that we have the comfort level and the knowledge that we need. So most of the mistakes that new investors make can be classed into a few different categories. So the first one is personal knowledge, one of which, of course, being investment strategies. How do we structure deals? All those sort of more basic sort of introductory skills that we want to make sure that we develop. And one of the great places to be is a group like this, where you're hearing from different experienced investors, you're getting different perspectives, different tidbits and pieces of knowledge. So you guys are in a great place to start putting together and increasing your personal knowledge. Another aspect where investors stumble a little bit is making sure that they have good information. So this is making sure that you are using accurate data when you run your numbers. When you do research into a market, you know, you're not getting an opinion from somebody's uncle who lives on this street, you know, in the next town over. You're actually going to CMHA and saying, okay, what kind of information, or CMHC, yeah, CMHC, not CMHA, CMHC. And making sure that we actually get accurate information without, you know, the bias of media and everything else involved. Another thing that we want to do is make sure that we're running our numbers correctly. So we're analyzing opportunities and deals and comparing apples to apples and not apples to oranges. We want to make sure we're developing tools and systems to make our processes streamlined, to cut down on the potential for making mistakes, and also to be able to replicate our best practices. You know, when we find something that works and it works really well, we want to make sure we keep doing that and we're not, you know, starting over again the next time we are going through a process. The other thing I find investors struggle with a little bit are success metrics. So this is goal setting and visioning. So how many people in the group have a really solid plan of what success looks like? And don't forget to message all panelists and attendees. How many people in the group have a really solid plan in place? Not yet. And that's pretty common, right? But the thing is, how can you do have one in realistic, good for you. So we want to make sure that we know what success looks like, because if we don't know what success looks like, how do we know if we're there, let alone if we're on the right path to get there? So it's really important we think about the future and what we're trying to create or achieve or accomplish so that we can put the right pieces in place to get there. So the first thing I want to ask for some of our more experienced investors, and it's awesome to see, you know, guys like Corey and Kristen and some of the other, you know, long-standing investors. How did you choose your investment strategy? Corey says success is progress in the right direction. Absolutely. It's not progress in any direction, right? It's in the right direction. So for those experienced investors here, how did you choose your very first investment strategy? We'll give people a few seconds. Option number 3, you got a crazy house from a friend. Okay, Kristen said, I fell into it when I had to move and didn't want to sell. Okay, Christina said, based on numbers and potential. Good for you, Christina. Because a lot of us, when we're starting out, you know, we watch a show on HGTV and we're like, man, 30 minutes and I can flip a house and make $100,000. Outstanding, I am in. The reality, I think everybody here pretty much knows that's not really what it looks like, right? Oh, Scott followed the advice of a mentor. Good for you, Scott. That's awesome. So there is a better way. There is a more strategic way. And one of the things I talk to a lot of my coaching clients and students about, I like to follow a process that's plan, prepare, execute. Plan, prepare, execute. Because most of us in real estate, we get in and we're executing all over the place. You know, we're execute, and then suddenly we go and we back up and we go, geez, you know what, maybe I should have had a corporate structure when I did this. Or maybe I should have, you know, figured out how many mortgages I could do so that I approached the lenders in the correct order so that I could get, you know, 12 or 15 mortgages as opposed to 5. And those are things that are definitely options. These are real things that we're facing as investors. So we know there's already enough challenges out there. Let's make sure we're taking the time to plan, prepare, and then execute as we start on our investment journey. So one of the very first things you want to ask yourself when you're choosing your investment strategy are, what are my investment goals? Because we know there's a lot of beautiful people on social media who are talking about do this, and I did this, and look at all my houses. And that's awesome because it keeps us motivated and it keeps us engaged and it shows us what's possible. The thing is, what works for everybody else isn't necessarily what works for us. You know, there's a lot of people out there who are going, buy single family homes and just collect as many of them as you can, and, you know, you'll be able to retire rich. I mean, Warren Buffett has a really famous quote about he wishes he could buy several 100,000 single family homes. But for me, when I run the numbers, the returns on single family homes don't match the goals that I'm trying to achieve as a long-term investment strategy. I buy them as rent to owns and as flips for sure. But I don't want to sit on, you know, a whole bunch of single family homes like a chicken with an egg and wait for it to hatch in 30 years and fund my retirement. I wanted to be able to leave my job. So I was more focused on income replacement, which means my goals are more short term. I need to focus on generating monthly cash flow, chunks of capital that are going to replace my income immediately. If you want to keep your job, if you are happy in your 9-to-5, that is awesome. And there's a lot of people out there who aren't. So that's really a blessing for you. You might be looking something at more along the lines of retirement savings. So you have the time and the ability to acquire property slowly, piece by piece, with the idea that in the future you'll refinance, reinvest your capital, but you can patiently build equity as opposed to needing to generate immediate cash flow and income. Those two different strategies, fueled by different goals, are going to look very different when you actually come to planning your journey in real estate. So the second thing you want to think about is whether you need to choose your strategy first or your market first. And this is a little bit like the whole chicken and the egg debate, like which one comes first. And for some people, they really have an investment strategy that they connect with, that they resonate with, and they want to find a market where it's optimal to do that strategy. Say, for example, rent to owns is your thing. Then it makes sense to look for markets where rent to owns are ideally suited to work. There are other people, for example, who say, you know what, I really want to invest close to where I live. Or I have a family member over here and I want to start by providing some housing for them. Or they say, you know what, I've got a dream place where I want to go, you know, I want to go to PEI every summer and I want to be able to write the trips off. So I'm going to start building my investment portfolio down there because I'm going to retire there in the future. So these are all the different considerations, but do you want to choose based on your investment strategy or based on your market? The mistake a lot of investors make is they will choose their investment strategy and try and smush it into their market. And not all strategies are ideally suited for every market. As I'm sure most of you know, and right now the markets, you know, I don't want to say post-COVID, but, you know, after the big lockdown, the markets are really hot. So it's challenging to find markets where a lot of strategies work. I mean, we know the challenges that people are having trying to acquire properties under market value so that when the market goes down, there's a bit of protection involved, right? So let's talk a little bit more about how we choose our investment strategy, the ideal one for us. There's a ton of common ones out there. I know we're going to be talking tonight a lot about, you know, wholesaling, burrs, flips, those kinds of things. I know Bill's a huge expert in a couple of these anyways, if not a whole bunch of them. A lot of the other popular ones when we're starting out, duplexing is huge, especially, you know, the London area and, you know, Kitchener, Waterloo, Cambridge. Severing can be you know, any markets that you're in where you find the double wide lots, severing can be provide a great return for you. Rent to owns, of course, pretty much anywhere in Ontario is prime for rent to owns, although not all markets are in a place where it's good. And then of course the buy, rent and hold, or the income properties, or the multi-unit residentials, or whatever you want to call them, those are a lot of times where people like to sort of park some money and let it grow over time, particularly if your strategy or your goal is to be able to retire with your real estate investments. So when you're thinking about or deciding on the perfect strategy for you, you really need to think about things from your personal situation. And again, you know, what we see on Facebook, the shiny, happy people, the reality of that is that sometimes, you know, everybody has challenges, and we really need to do what's in our best interest and not what, you know, our friend tells us to do, or our uncle tells us to do, or what our realtor tells us to do. So thinking about things from the perspective of your personal situation, realistically, how much time can you dedicate to real estate each week? So realistically, how much time can you dedicate to real estate activities each week? And if the answer is 2 hours, that's okay. And if the answer is 12 hours, that's okay. And maybe the answer is 25 hours, and that's okay too. But it's not realistic to think that we're going to flip homes when we have 2 hours a week. We want to make sure we choose a strategy that fits with our availability, because otherwise we're just setting ourselves up for massive amounts of stress. We want to think about what our current level of knowledge is. You know, how much do we know about how to acquire properties, about, you know, what clauses we want to put in when we're making offers on properties, about how to run numbers, and all these other fundamentals to ensure we're not overpaying for a property and we're going to take it to its highest and best use. We need to think about what our financing options are and how long we, or our investor, if we're going to have a joint venture partner or a private lender or something along those lines, how long will we have those funds or that financing option? You know, if somebody comes to you and says, hey, you know, I have this line of credit on my house, I'm willing to lend it to you for 6 or 8 months, but then I'm going to do something else with it. We're not going to take their money and use it as the down payment on an income property unless we're prepared to trade it out in 6 or 8 months. So we want to make sure we're matching our financing options and opportunities with our investment strategy as well. And the last thing we need to think about is our risk tolerance. So there are different strategies that inherently have slightly more risk associated with them. And if we are very risk adverse, or if we're just starting out and we're unsure how we feel about risk, it doesn't make sense to pick some of the strategies that have higher amounts of risk associated with them, and they violate what I call the sleep at night principle, which is when your investments are preventing you from sleeping at night, there's a disparity between your risk tolerance and your investment strategy. So just going in a little bit more detail here. Everything okay?
Sorry, yeah, we're good.
Okay, awesome. All right, so just going into a little bit more detail here. So when we're thinking about active income, you know, we think about how much time do we have available. Investment strategies like wholesaling, flips, BRRRRs, duplexing, rent to owns, these are strategies where we're effectively trading time for money. So we're putting in larger chunks of time and we're using that to create capital, whether we're using it as capital to replace income or whether we're using it as capital to fund future investment opportunities that we're going to acquire. We're essentially trading larger chunks of time for money. Whereas there are more passive income strategies, which would be commercial or residential buy, rent, and hold properties. Now, they typically require less energy. You know, the largest investment usually is going of how I'm going to go about finding them. And then once you have them, then particularly if they're properties that you know, have a local property manager or someone on site, then it's just basically managing the manager, and you might be looking at a few hours a month. So definitely less time and energy involved when you're looking at passive income properties. And I just want to highlight here, the correct definition for passive income is that you must have positive cash flow, property appreciation, and principal pay down. But I like to include private loans and mortgages as passive income. They don't meet the true definition, but for those of you who are interested in private loans and mortgages, they can definitely be a great way to take your funds, get a consistent rate of return on them with very little time and energy invested in them. You know, you look for an opportunity, you place your money for 3 months, 6 months, that's it, you let it bake, you get it back, you turn it over and do it again, right? In terms of our knowledge base. So when we're a beginner, it makes sense to start with strategies that are a little bit simpler, that have less moving parts, where there's less knowledge and expertise required right at the beginning. The idea behind it is, as we acquire knowledge and expertise, then we move on to more advanced level strategies. You know, if we've never put in an offer on a piece of property before, that's okay, but we're not going to necessarily go right to land development as our, you know, very first investment strategy, because we're missing a whole bunch of pieces in between. So it makes sense to start with, you know, the low-hanging fruit, so to speak. So beginner strategies would be things like wholesaling, buy, rent, and hold residential properties. I wouldn't consider commercial, buy, rent, and hold commercial properties sort of easier ones. Private mortgages, hard money loans, you know, those would be the great way to get your feet wet in real estate. And sometimes it's literally as easy as, hey, I have some RRSPs, they're not performing, I want to take those and put those in and do some private mortgages with those. And that's how I'm going to get my feet wet, and I'm going to learn how to, you know, vet a market, how to decide if a property is a good investment, how to look at a borrower. Because you were learning the basics, and then we can upgrade from there, move into rent to owns, flips, duplexing, BRRRRs, and then go right into the advanced level strategies. There's as we talked about earlier, capital consideration. So if we anticipate having funds, you know, maybe we're doing some private lending or some private borrowing because we don't have capital of our own that we're starting with. Typically, we're going to be wanting to look at shorter term investment strategies, because private funds can be very expensive. You know, there's hard money out there at, you know, 16, 18, sometimes 20%. That's not money that you want to keep for the next 5 years, right? That's stuff that you want to churn and either sell the property or pay out the loan. So short-term investment strategies, wholesaling, rehabs, hard money loans, these are ones where you should be in and out of the investment within less than 6 months. You know, medium length strategies would be rent to owns, which are typically 3 years on average. Private mortgages, they could be anywhere from 1 to 5 years. Land development, depending on how long you're going to sit on it. And, you know, longer term strategies, commercial and residential, the buy, rent, and holds, those are ones where you're in this for the long game. You know, you're anticipating, I'm going to hold this property for 5 years, 10 years, 20 years, 30 years, because I'm going to use these investments to build wealth, not because I'm going to replace my paycheck with it from day one. And then we want to think about our risk tolerance. So lower risk strategies would be things like wholesaling and private mortgages. Obviously, slightly higher risks would be things like flips and hard money loans. One of the things that makes flips slightly higher risk is looking at the market. And that's one of the challenges we're having right now in this sort of post, during, mid, like I feel a bit like we're in the eye of the storm here in COVID. Does anybody else feel like that? Anybody else feel like we're in kind of the eye of the storm here, and like something's coming, we just don't know exactly what it looks like? It's coming down the pipe, school's just started, you know, we don't know what it looks like. So how can we predictably say, okay, you know, this is definitely the way we want to go because we think the market will be this in 6 months? We know that real estate has a lag time. The question is, what does that lag time look like for COVID? This is unprecedented for us. And yes, Dan, I think it would be wise to be cautiously optimistic. I also think there, you know, based on my, you know, what I see on the landlord groups in Ontario, there are going to be some landlords who are going to be in distress. I don't think, now whether that's enough to cause a major downturn in the market, I don't know. But there's definitely people out there who aren't paying rent, and there's definitely landlords out there who are suffering because of it. So it's a little bit of wait and see, right? But we want to make sure when we're doing flips, we're not trying to, you know, buy at the top of the market and sell at the bottom. So we want to make sure that we time that well. And I suspect Bill's going to have some good insights for us as well in terms of how to plan our strategies. So the next thing, or the other factor that we want to consider, of course, is the market. So when we're looking at market considerations, the first thing we want to think about is, does it have to be our local market, or are we willing to go a distance? So one of the reasons why Kirkland Lake is such a great place for investors, and you know, I grew up in Scarborough. When I got married, I lived in Newmarket, and then 4 years ago I moved up here. So I kind of know, you know, the draw of the GTA, and you know, everything's there at our fingertips. You know, I went home a couple of weeks ago to see my mom. It was the first time I'd seen her in 7 months, and I went to Costco, and I was like a kid in a candy store. I was home for 1 week, and I was there 4 times in 1 week because I literally went, and I'm like, oh, and then the next day I had to go back again. And, you know, it's Costco. I mean, it's like It's amazing. But anyways, so we need to decide, you know, if we're not going to be doing the property management, then does it have to be in our town? Wouldn't it make sense to buy investment properties where the numbers are better? If so, if you're not going to be managing, and I've had situations where I've looked at multi-unit buildings and the numbers have been great and I liked the building and I liked the market, but I couldn't find that property manager who I could trust, and I passed on the deal. Because your property manager will literally make or break your returns on your investment. So you don't want to have someone looking after your property who maybe, you know, isn't going to look after your money with the highest to you know, make sure that you're getting the highest and best use and the best return on your money. So you want to look at local, think about local versus distance. You want to think about what phase each market is in the real estate cycle. And we're going to talk about this in the next slide. You also want to think about what type of market are you looking at, and then matching that with the strategy. Because as we said, not every strategy works in every market. And then we want to look at the economic fundamentals of each market. So what is happening with employment? What is the average income for the residents? What is the purchase price for a 3-bedroom, 1-bathroom? How does it compare, you know, to historical averages? What has it been doing the last 3 years, the last 5 years, 10 years, 20 years, 30 years? Obviously, we're looking for a trend that's going up, right? We want to take a look at what average rents are, what vacancy rates are, and there's a whole bunch of other factors we want to look at. But, you know, we're not just going to say, okay, I'm going to invest in my market, you know, I'm going to invest here because I live here, without actually looking at the economic fundamentals and making sure it makes sense from a long-term perspective. And what I like to encourage my clients to do is, anytime you're running numbers and looking at markets, look at least 3. Because you can do a deep dive into your local market and come up and say, okay, this looks great, but it looks great compared to what? You know, maybe you run the numbers and you go, well, geez, you know what? You know, St. Catharines looks a heck of a lot better than Niagara, but I live in St. Catharines. So you want to make a decision based on having a clear picture of, you know, what is my best opportunity? What are the best options that are out there for me? So most of you are probably familiar with the real estate cycle. A lot of our markets right now are sort of somewhere up in here with the expansion. And what we're dealing with the whole COVID situation is, are we here and is this part starting? Or are we actually somewhere over here and the market's going to continue to go up? We know most of the markets in Ontario right now are sellers markets, which is making it hard for us to find deals. But we know as a buyer, we are much better protected from market changes and from risk when we're buying over here, or actually ideally when we're buying over here as the market's starting to go up, right? But if we buy a property here and then we try and sell it over here, we're not going to be in a good place financially, right? I think we can all pretty much agree with that. This is another one of my favorites, and I don't know if you guys have seen this one before, but this is the market segmentation. So this is looking at primary, secondary, tertiary markets and matching them with the ideal strategy. So Shawn and Jenn, what would you guys say? London market, would you say that this is sort of heading into a primary market? Do you think this is more along the lines of a secondary market, you know, sort of smaller outside city center? What kind of appreciation are you guys seeing in London? What kind of cap rates are you guys at? Do you know?
Yeah, London's pretty much a primary market. We invest pretty heavily in tertiary markets, which are the smaller ones around the London area. Typically, in our towns are 20 to 40,000 in population. But yeah, for sure, London itself, I would say, is primary, and then there's sort of the smaller markets around that London area that would be the secondary.
Absolutely. So that's why, flips in London, as long as you can get the prices low enough, wholesaling and flips, they make sense in London, because even though it's a smaller market than, something the size of Toronto or Vancouver, the market performance is looking more like a primary market. If I talked to you 10 years ago, we might have been talking about London as a secondary market. I mean, London's really exploded. So in that particular case, then rent to owns would have made sense in London, 10 years ago. It's a little bit more challenging to get them to work now, but you can move outside like ripples in a pond, if your strategy doesn't work in a primary market. So now we move a little bit further out. Now we're not buying, doing rent to owns in London proper, but we're doing London, communities outside London. So we can adjust our strategy and adjust to our markets. So here's why so many people are struggling right now with buy, rent, and hold properties and finding opportunities. And the reality is, because the markets that are going to generate the returns that we're looking for are tertiary markets. So these are markets that are more often a buyer's market, where the properties sit for a little bit longer, where we're not paying top dollar for them, those kinds of things. So that's why we're struggling, in London to find multi-unit properties that cash flow. We have to go out and look farther out in the outskirts if income properties or buy, rent, and hold properties are the strategy that we would like to go with.
Hey, Elizabeth, can you just touch on for a quick sec, there was a question of what cap rate is. Can you do a quick explanation there?
Sure. So I'm not going to get into, like, for the new investors, I'm not going to do like the technical definition of cap rate, because you guys can look that up on your own. But here is what I look at cap rate. I use cap rate to compare how much I'm paying for a property across different markets versus the rent that I can bring in, right? So if I have a low cap rate, that means I'm paying a lot for a property versus the rent. If the cap rate is higher, I'm paying less for a property generating exactly the same income. And it becomes a tool that we can utilize. So the cap rates in Toronto are low, the cap rates in Kirkland Lake are high. So I'm going to be generating consistent rents in Kirkland Lake, but I'm paying a lot less. So you know what? My returns are better. The thing to keep in mind when you look at tertiary markets is what you're typically trading is appreciation. So I'm not seeing in Kirkland Lake, I'm not seeing 10, 12, 15% appreciation every year. In all likelihood, I'm seeing 2 to 3. But what I'm getting is $100 per door per month in cash flow. And that's usually the trade-off. So hopefully, let's back up for a second. James, hopefully, that answers what you were looking for cap rate. To me, it's not so much the definition, it's how it can be utilized that's important. Tanya said, what about Peterborough? I'm seeing Peterborough as honestly a lot like London, where Peterborough, I was chatting with Rob Brake a little while ago, and Peterborough market, they're duplexing. They're very quickly reaching the ceiling where it doesn't make sense anymore. You can't get properties for cheap enough to duplex them. So a lot of commonalities, Peterborough, London. Think of Hamilton, where it was a few years ago, and it's just continued to go up, right? My opinion of Windsor. So my opinion of Windsor, I think that as long as the employment, and we have to keep in mind when we're talking about markets, one of the fundamentals of market pricing is demand, right? So one of the things, what keeps demand high is employment. So as long as employment is stable in a market, we are more likely to see a market that maintains its current trajectory or growth pattern. You look at a market like Alberta. What was it that caused the massive crash in Alberta? It wasn't that, oil and gas, that the pricing and everything changed there. It was literally that people lost their jobs. So people left. There were thousands of abandoned trucks, big, fancy, expensive pickup trucks abandoned at the airports because people lost their jobs and they left in droves. And that's what drove the house price down, was because the demand dropped. So that's why there's some, a little bit unknown with, with sort of the COVID stuff, because one of our drivers for demand is immigration. And what's happening with immigration now, we don't know. So, thanks, Razna. Let's see, Tanya, what about Niagara Falls when the GO train? Anytime you are looking at infrastructure, particularly infrastructure in a town that connects it to a major city like Toronto, you are going to see growth. Look at, just as a small example, look at what the 407 has done for all the communities across the 407. Look at what the extension of the 404 did for Keswick. Keswick used to be and having lived in Newmarket for 10 years, I can say this with all love, but Keswick was like the armpit of York Region, right? And as soon as they extended the 404, we had a duplex that we had bought up there to do a rent to own. Our tenant buyer didn't buy it. We sold it 2 years later for $125,000 more than they were supposed to buy it for. Like when there's economic fundamentals like infrastructure being put in place, you really can't go wrong there. Okay, where were we here? And I'm trying to be mindful of time because I don't want to take Bill's time. Okay, so when our deciding factors when we're choosing a market, we want to be aggressive, but we want to be realistic. So take a look, spend some time, investigate the advantages and the disadvantages of each strategy. You know, there's resources out there. Mark Loeffler's written a book on rent to owns. You know, Ian Szalbo's got a book out there. You know, Ben's done a book on wholesaling. Like, take the time and really learn. And make sure you understand the pros and cons, the advantages and disadvantages of each strategy. Become an expert at one and then plan to move on to your next one. Make sure you know what your long and your short-term goals are. And then make sure, and I can't stress this enough, make sure you have multiple exit strategies for every single deal you do. And just to clarify, I know sometimes there's a little bit of confusion for some sort of newer investors, but this is what we should be paying the most attention to with every single investment. There's 3 different phases. There's acquisition, there's the investment itself, and then there's the exit. And a lot of people say, okay, I want to do wholesaling. And I say, great, that's awesome. So what are you going to wholesale? They're like, no, I just want to wholesale. That's my investment strategy. I'm like, outstanding. What are you wholesaling to people? They're like, oh, I don't know. I'm just going to sell them some houses. We have to have an investment. You know, each of the strategies that we talked about, there has to be a plan for how we're going to acquire a property, how we're going to make money from a property, and whether it's, you know, in the short or the long term, how we're going to exit from that property. And if you only have, you know, one exit strategy in mind, you might want to think that because you're taking more risk than you would necessarily need to with each investment. So acquisition, maybe you're going to go out there and you're going to do some marketing and find some deals on your own. Maybe you're going to take advantage of some good wholesale opportunities in your neighborhood, or you're going to work with realtors. You're going to use your strategy to make your money, and then you want to make sure at the back end, you know, what are my options? Well, I can list it for sale with a realtor. I could sell it privately to another investor, or I could even do a rent to own. I mean, a lot of people think rent to owns on single family homes. You can do a rent to own on pretty much any type of property as long as you can work out the details. So lots of different investment strategies out there. Make sure you're choosing, you know, the highest and best use for each property that you're working with. So the final tip that I want to leave everybody with is what is going to help to set you up for success, what is going to give you confidence, what is going to empower you, what is going to enable you to make decisions is going to be knowledge. That is what is going to set you apart from all the other people out there who are, you know, running around and doing things, but they're doing it hoping that they're going to be successful, as opposed to the plan, prepare, execute model where they are ensuring that they will actually be successful. So I'd like to thank you guys so much for the opportunity. Thank you for having me, and thank you everyone for listening and putting up with me, because I know Bill's going to be outstanding. So I'm honored to be the opener for Bill. And if anybody would like to stay in touch with me, if you would like to book some time for a discovery call, if you want to see what my recommended resources are for new real estate investors when they're starting out on their journey, by all means, you know, send me an email, send me a text message, and I'd love to connect with you all. Thank you so much, guys.
Amazing. Thank you, Elizabeth. That was awesome. And I can see here all of the thanks coming in from the chat. Thank you again for taking questions through your presentation. You're like right on it.
All over it.
Thanks. I love this. Honestly, this feeds me. I did notice there's a couple of questions that popped up. So Kristen said, is this also the CRA classifies active and passive? Great question, Kristen. So Kristen was asking about, you know, is passive income rental income? The definition really depends on a whole bunch of different factors. It's definitely ideal to talk with your accountant because, for example, for some people, flip income would be active and it would be, you know, taxed at your current level. And for other people, depending on your corporate structure and that kind of thing, it might very well depend, and it might be classed as passive income. Would Peterborough be a secondary market? Tanya asked. At this point, I would certainly have classified it as one previously, but it's starting to show a lot of the hallmark tendencies of a primary market. So it's somewhere there in the middle, which, like many things in real estate, the short answer is it depends.
Yeah.
Thanks so much, guys. I'm looking forward to Bill. I'm going to turn my camera off and take some notes.
Awesome. Well, thank you again, Elizabeth, for joining us. And you just dropped a whole lot of amazing information. So I hope everyone was taking notes and like screenshotting. We will, I believe this is recording. So the plan is for us to be uploading this onto our YouTube channel. So don't worry if you didn't catch everything. We will be sending out the link so you can go watch that replay when it's all set. Okay. All right. Where are we at here? Are you still the host there, Elizabeth?
No, I gave it back to you.
You gave it back to me. Perfect. Okay. So, sorry. Let's see here. There we go. Okay. So next up, first of all, I hope you all are doing okay. I don't know if you need to run and use the washroom for a minute. I guess we're not a bunch of kids, though, are we? I'm thinking about my children sitting for 2 hours, and can they stay sitting? But anyhow, next up, we have another fantastic speaker. We have Bill Allen, and if you've been watching any of our Facebook lives that we did over the summer where we were incredibly awkward.
Or at least I was incredibly awkward. You're good in front of the camera.
So this is the man who encouraged us to do this, those Facebook Lives every day. I'm going to read you a little bit about Bill's bio here, so forgive me for looking down. So Bill is joining us, like I said, from the US. He's down in Nashville, and he founded, I'm skipping ahead. Here we go. Bill is Bill is a Navy pilot, as well as a real estate professional, and is the CEO and owner of 7-Figure Flipping, as well as the host of the 7-Figure Flipping podcast, where he leads the top house flipping and wholesaling mentoring groups in the world. Just a few years ago, he was flipping 1 or 2 houses a year and doing all of the work himself. Since then, he has built a systemized business that runs without him having to be there. His wholesaling and flipping company, Blackjack Real Estate, does upwards of 200 deals a year in today's market. That's incredible. In 2007, Bill became an accidental landlord. He fell into the real estate investing industry. Since then, he has just grown and grown. He has a team of over 15 now who are experts in their field and passionate about investing in real estate and helping others. Bill's journey in real estate has built his knowledge and expertise in leadership and hiring, raising private money, self-directed savings funds, as well as private and hard money lending. And this October, he is hosting the annual Flip Hacking Live event virtually. Yes. I'm not gonna lie, I'm a little disappointed it's a virtual thing, but I get, at least it's still going. That's what
we were getting ready to have our tickets to Disneyland at the same time and going with you guys to that as well. And but we're very much looking forward to it virtually as well.
Come on down. I'm going to Disney World right afterwards. So.
All right.
I guess we can always just quarantine. But anyhow, this event, I'm sure if you've been on our Facebook page, you've seen us talking about this event. We have Corey, if you want to drop, there is a link that if we'll let Bill get to his thing, but if you want to join us at this virtual event, Shawn, just take 2 seconds to talk about it and why people should go, or what you got out of it, maybe.
So I've been to the 7-Figure Flipping, the Flip Hacking Live, the past 2 years in person. So we went down to San Diego for both those years. The 3 days of the Flip Hacking Live, when I went down there first year, I was kind of skeptical, and I'm always assuming that there's going to be sales pitch after everything and run to the back of the room. Like, I've been to all of those seminars. And so when I went down, I was really skeptical. But what I found out, like, the 3 days was really very genuine. And it was just a lot of people sharing what they're doing in their business and what they've done to make them successful. And they're just sharing everything, and basically open book. And they're not selling anything. They're just there to share with the group, part of the 7-Figure Flipping group. And it was just 3 days constant of this, just people sharing their knowledge and networking and being helpful for each other. It was amazing. So I went back last year. And then at the end of that, the end of Flip Hacking Live last year, I joined the 7-Figure Flipping group as well. The mastermind. which was part of the 500K challenge that we did and stuff like that. But this year we were going to go back for the third year as well, make it a family trip as part of that, because it was supposed to be in Orlando and it was going to be an amazing event.
Still gonna be amazing.
I would say in person, but yeah, so now it's going to be done virtually, so you can sit in the comfort of your own couch and watch this. And truly, it is 3 days of just endless content and just writing stuff down and taking the one nugget or the two nuggets from people, that are doing things that you want to be doing, and taking that information and then taking action on it. It's just incredible.
Absolutely. So I'm sure Bill will tell us more about it a little bit later. But Corey, if you want to drop the link into the chat where people can get their tickets, that would be awesome. Okay, Bill, I'm sorry for the delayed intro there, but the floor is yours. Welcome. Thank you for joining us tonight.
Yeah, thanks for having me. Hey, before I do, maybe Shawn, you can answer this question. So someone asked, so the flipping tips at that event or in the mastermind can be done in deals both in the US and in Canada. Can you answer that? Because you probably answer it better than me.
Absolutely. And, quite honestly, that was the other thing that was a little bit, I was going down there expecting to have it really heavily concentrated on just Americanized sort of stuff. But there's a little bit that we can't do, like lists and stuff like that. But 95% of the information is stuff that you can do on either side of the border. Right. And it's actionable stuff that you can take back and do. And whether it's on your business itself or just inside the business, like how to flip or how to do like certain things like that. So yes, there's a little bit of a component that is just American, but 95% of it's all actionable up here.
Awesome. I'll say, like, business is business. It doesn't matter if you live in the US, if you live in the UK, Australia. I mean, we have people that are going to join us at this virtual event from all over the world right now. And obviously we have some of our Canadian members of the mastermind. So we are the top flipping company in the world. So the mastermind group, you guys are the reason that world instead of nation is in there. So thank you for being a part of it. So let's see. It's interesting. Like, the opening of this was Shawn bought a house and surprised Jenn. You guys were doing rentals and ran out of money. It's like I was hearing the same thing. When I bought my first flip was a bank-owned property. It was an auction property. And I just put in this offer. It was like $30,000 less than what they were asking for. And I was actually in Nashville about to get married. It was 2 days before our wedding. And I remember sitting at my aunt's house on a computer. I opened up the computer, checked my email, and like, congratulations, you won this house. And I was like, oh crap, I better tell my wife that in 2 days that I just bought.
The same reaction I had.
Yeah, I just bought this first house that had a foot of water in the basement, termites eating the floor right when I walked in and stuff, and I had no idea what I was doing. So that was my journey and my introduction too. And then, I was running out of money with the rentals, which is why I started flipping, to kind of buy more passive income. Like, I wanted that active income, just like Elizabeth was talking about. I wanted that active income to then turn around and invest in passive assets, and just kind of make sure that I had some mailbox money and some things when I was sleeping. So very similar. And then the 500K challenge, I didn't think you guys were awkward. I thought your videos were awesome. Shawn was a little bit awkward, but you guys got better and better over time, right? And I love that. I think Andrew put like the 30K challenge in the chat by accident. I was going to ask him if he only raised $30,000, and that's why I was calling it that. But there was like this Canadian movement for a while of all these people in Canada doing the 500K challenge to raise money for their business. So it was really cool to watch. And I think a lot of people on this call probably were doing it. So thank you. Hopefully you got a lot out of it. And a lot of that, like, we've had hundreds and hundreds, probably like 300 or 400 investors go through that, and 2 or 3 people joining every day. It's really cool to see. And I put a lot of work into that, way more than I thought. Let's see. Elizabeth talked a lot about, I could almost spend like the next 40 minutes, like, talking about her presentation and all those things, like the like effects of COVID and what's going to happen and where we think the market's going and all that stuff. So I'll do the presentation that I have planned, and then hopefully we have plenty of time for questions and stuff like that if we want to get into some of those things. I do have, like, the eye of the storm is what she said. Like, we're kind of, the interesting thing that I feel like is some people on this call and a lot of people out in the world have been impacted heavily, like themselves primarily. But I feel like the majority of us haven't really felt the effects yet. It's like we are just like waiting for something to happen, like she said. And we, like, as a whole, we know that there's going to be some effects. Here in the States, we keep bailing ourselves out with our own money, and we're kind of like the economy's propped up on nothing right now. So it's very interesting with where it's going. But the demand, like she said, demand for housing is so high, and the supply has gone down even more than it already was. So it's really helping house flippers in the short term right now. So the challenge that I've given to all the speakers at Flip Hacking Live this year in October is different than what I gave them before. In the past, I said, bring what's working right now and start talking about that. This year, the challenge that I gave all the speakers is come prepared to talk some about what's working right now, but primarily about how are you preparing your personal and business finances for the future? Like, what are you doing and what are you thinking about for the next 6 months, year before we meet again? Because I want people to show up, and I want them to take that information so they can build the foundation and prepare themselves for what's going to come. Whether you're brand new, just getting started, what should you know going into a market that could potentially be going down or opening up a lot more opportunities? And if you're advanced and you've been around and doing this for a while, what are some things you might not be thinking about? So that's the challenge I gave the speakers this year. I'm really excited about what we put together. I think the lineup is, I don't know, I've had a lot more time to plan the lineup this year than I did last year. Last year, I bought the company 3 months before the event, and it was great, but I was throwing it together at the last minute. And this year, I've had a long time to plan this 3-day journey we're going to take you through. And it's an experience. It's not just like I realize I'm saying this on a webinar, but it's not like a 3-day webinar, right? You're on a 2-hour webinar here, an hour and a half, and 3 days of that seems a little tough and challenging to do, but it's a journey. Like, we have some really cool stuff planned. It's interactive, breakout sessions, lots of different things that we can do to make it fun and exciting. And also, it's a lot cheaper. You don't have to travel. You don't have to get the hotels and airplane tickets. And we can still build in the networking that a lot of you extroverts want. And you introverts already bought your ticket because you're really excited that you don't have to talk to anybody or sit down next to people. So, all right. I don't know. You might need to give me the host. I have like a whole studio here. I've got like 3 or 4 screens. So you might see me like looking left and looking right. And I'm just making sure that I have the best setup here for you guys. Can you give me either give me the host or make me co-host so I can share the screen? The glasses are back on. Business Jen is back. Oh, I wish I could see all you guys laughing, hopefully. Hey, also, while she's setting that up, like, drop some stuff in the chat. I want to hear you. I want to know that I can't see you. I really feed off energy, like people shaking their heads and telling me, or falling asleep, and I know I have to pick it up and like snap you out of it. Like, all of you right now that are checking your email, stop checking your email. Put down your phone and focus right here, right here. Okay, just stick with me just for a short period of time. I'll change your life in 30 minutes. I won't promise that, but hopefully it changes the way that you look at your business and things going forward. So, all right, she gave me the host capability. Now I can do all kinds of crazy stuff. Stop a recording and do all kinds of fun stuff, but I won't do that. All right, let me share my screen here. And Shawn, if you can give me a thumbs up that you guys can see it. Can you see it? Okay, awesome. Looks like I still got a pretty good setup here. So, hey, before we get started, what I want to do is, first of all, I want to say thank you to Shawn and Jenn for putting all this together. This stuff is not easy. This stuff is hard, getting people to show up, doing Facebook Lives and posts and probably some paid ads and all kinds of stuff. Like, it costs a lot. It costs time, and that's the one thing that we're never going to get back. So thank you guys for putting this together. They even were so so prepared that they sent us an Excel sheet of who you guys are so we could get to know you a little bit. And if you're new, if you're advanced, if you're intermediate, so I could actually look through that and kind of tailor my message a little bit. And then also what you guys want to get out of this. So before I start, I want you to know that we actually look at that stuff and read that stuff. So I went and looked on the lineup to see who was here. So Tom Sullivan. Hey, Tom, I know that you're out there. You're with us here. So Tom has got a few properties, but still has a 9-to-5. And he wanted to like mistakes to avoid. He wants mistakes to avoid. Kaleem, you're here too. Advanced full-time investor. New strategies to expand my knowledge base. There's a couple people that I didn't notice on here, but you're probably watching the replay. Shawn, he said, these speakers have experience that I do not. Keeping an open mind and listening to what they have to share is what his plan is. Ashley, still learning and interested in everything they have to say to help me maximize my investment and prepare for the next. And I share all that stuff because this is the mindset that you have to go into showing up at these things and building your business, is being humble and knowing that the people that are presenting to you have some experience that you want to take. Like, you want to take this experience so you don't have to go reinvent the wheel and do the same thing. So these lessons learned, like, the belief is what you need to have. You need to have belief that you can do this and it can work. because a lot of people will show up to something like this and be like, like Elizabeth, yeah, sure. Like she knows what she's doing. She's been doing this. I can never do that, you know? Or somebody else say, yeah, but I can't do that because I have a full-time job. Or yeah, but I don't have any money. Or yeah, but I don't have this other thing. And it's the person that shows up and says, okay, I can do that. Like these people are mentors and coaches and they run different groups and they run businesses. Like, I'm just going to do what they say. Like, I'm just going to do that thing. And the people that I see in my mastermind group and that show up to Flip Hacking Live and make it like they're attending and then they're on stage the next year, these are the people that they just do what they're told. Like Mr. Miyagi told Daniel-san to do those things, right? And he wasn't like, eventually he does say like, why am I painting a fence? Why am I waxing a car? What are you talking about? Like this is ridiculous. I want to fight, right? And hopefully everybody's seen Karate Kid. That's a thing in Canada, right? Okay, yeah, they're shaking their head, yeah. Okay, so like, and then he just throws a punch, right? And he like blocks it out of, just because he was, you know, painting the fence, waxing the car, doing all that stuff, right? So I say all that because those folks that like put that information, like you guys, I'm talking directly to you, like, and these are experienced investors, mistakes to avoid, lessons learned, new strategies to expand my knowledge base. Like these folks don't need to be here. They're doing this full time. So that belief in the fact that you can do it, and then you have to understand that sometimes you might not understand why somebody's telling you to do something or this concept that they're sharing with you. If they are mentors and they have the life and the business that you want, just go do it. Just go do it. Okay. And this is a concept that took me a long time. I'm a hard-headed engineer, military type who's like, I'm not listening. Like, what? No. Like, let me think about this. Let me go back and redesign this thing. And why would I do that? I'll tell you, the reason I was successful is because when I paid $25,000 to join a mastermind, when Andy McFarland told me what to do, I just did it. I said, I paid a lot of money for this guy's advice. I don't know what he knows. Okay. So I want to set the frame there for everybody. And anytime you show up to stuff like this, like, yeah, it was free to come here, but you're spending your time. And that, like, I can't buy that. That's just not something that you should take lightly. And that's the way that I treat that 3-day event. So, okay, now that that's covered, you guys can see my screen. Shawn, you see it? So to Shawn, Ashley, Tom, Matt, Kaleem, hopefully I'm pronouncing your name right. I'm glad that you guys are here. I'm glad you guys are watching it. And that's the kind of mindset that everybody should have when they show up. So, all right, here's my presentation. The one thing that cost me $487,000 and how you can avoid it for free. I wanted to come up with this really cool, like punchy title to get you excited. So I'm going to save you $500,000 today if you just stay with me for like 30, 40 minutes. It usually takes me about 40 minutes to get through this, depending on how fast I talk. So I'll try to slow down a little bit. But I get really excited about this stuff. So, all right, I'm going to tell you a quick story to get to know me. Some people on here know me. Most people probably don't and have no idea who I am. You heard a bio, actually like a really long bio. I can't believe that my assistant Jenn didn't send you the really short one. But for me, like I've got 3 boys, and I've been like managing them and on my own with them for a little bit recently. So I'm going to tell you a story about, we go to the zoo. We go to the zoo like every weekend. If the weather's nice, we like to go to the zoo. We have a pass there. I love it. I can pull the kids around in this wagon. I have a 6-year-old who just turned 6. I have a 3.5-year-old. And I have a 2.5-year-old. And my 3.5-year-old is special needs. He's had a bunch of open heart surgeries. It's really like I have 2 twins, which you'll see in a second. So, but he just doesn't, he understands, but he just can't, he's nonverbal. He can't really talk to me. He can't tell me what he wants. He just goes, like screams and points and stuff. And I can tell that he knows what he wants to say. And my 2-year-old, he's not really much help right now either. But they're both get into everything and they go like 2 different directions, like the velociraptors when they get out of the cage in Jurassic Park. So I'm an engineer. I'm a checklist person. I'm a systems person, right? So I get up in the morning. I know on Saturday mornings, I make crepes for the kids. I got the crepes. And that morning, I get up about 30 minutes early. I set out all the things. I got my ingredients. I got my checklist. I know exactly where everything is. I make the crepes. I got the process. I get their water bottles are full. Their bags are ready. Everything's in the car. It's all staged. I let the dog out. I let the dog out a second time because he eats his food while we're eating breakfast. And I'm like doing all this stuff. I get the movie ready. The van is in. All the car seats are there. I get them all in the car seats. And I'm going through my mental checklist, right? It's not written down. It's just something that I've done over and over and over again on my own to take 3 kids to the zoo that are 6 and under. And I'm like, okay, I'm ready to go. I get in the car. I start driving to the zoo. And halfway there, I go, I forgot to check to make sure this little red wagon that I pull him around the zoo is there in the car. And at that time, I was like, it's not a big deal. So I'm like, the nanny had it. Okay, if I get there, it's okay because the stroller was in the back. So just in case she took the wagon out, the stroller's there, the double stroller, it's fine. I'll just put him in the double stroller. My son will walk with me and we'll just walk around the zoo in the stroller. They won't love it, but it won't be so bad. And so I get there, I open the trunk, and sure enough, the stroller's not in there and the wagon's not in there. And I'm like, oh my gosh, what am I going to do, right? So I don't know how to take 3 kids around the zoo. I've never done that before. It's very uncomfortable for me to think about even possibly doing that. But I take him for a hike a lot, and I put my son James in this backpack, this like ergo baby type backpack thing, and then Lucas walks, but it's a trail. Like they only have one place to go. Like he can't go in the woods because there's trees. So usually it's okay that Will and Lucas walk and James is on my back. So I have that thing in the car, fortunately. I put it on, I put James in there. I have a choice at this time, right? I can turn around and go home, which is 40 minutes away, and then I can't make it back because they have to nap. Or I can just suck it up and say, okay, I'm gonna go. I'm gonna do it. And I've never been through this experience before. I've never done it before. I am scared through all get out of what's gonna happen. I have no idea what the result is gonna be. I know it's gonna be hard for me. And I don't have the skills yet. I don't have those skills. I've never done that before, right? And the reason I tell you this story is because this is what business is like. You get to a point in your business where you have to do something that's uncomfortable, and you have to decide whether you're gonna just go or if you're gonna turn around, get in the car, the kids were already in the car, they're watching a movie, they're happy. Like they probably would have screamed for about 5 minutes, and then I would have like put on a different movie and then been fine. And we go home, play in the yard. And that's what I was thinking. I was like, that's easy for dad, right? And so I took the hard way and put him on my back. Will and Lucas are walking, and let's go. And we did. And so you have to decide what you're gonna do in your business and what kind of decision you're gonna make at that time. So here we are. This is James on my back. This is Will, and Lucas is our baby. And this is them at the zoo. This is us. Like we're going in the zoo right here. And this is me. I'm like freaking out. I have no idea how this is gonna go, right? But then like as we start walking through the zoo, it's not that big of a deal. And then here I can take a picture with James and the rhinos, and the lion is out, and we can see all these things and take the picture. I'm sorry, the tiger. There's a tiger. And it just was an awesome day. Like it just turned out, it was hard. It was definitely hard. But when I got them all in the car, here's what I felt. I felt accomplished. I felt like I did something. I felt like I could now go do that again and not and know how to do it and understand it and not have and probably make it a little bit easier on myself, because I learned a couple lessons, like don't get James out of the backpack to give them ice cream, because you can't get him back in. So now I had like 3 kids running around, exactly what I was scared of, and I eventually like talked him into getting back in. But like I wouldn't do that again. I would just kind of put the ice cream up there and just he would drip it on my head. Like that's what I would do. But this is the reason I say this is a little bit to get to know me and my family, but also just a lesson in business. Like this is the same stuff happens all the time. You just don't realize it. You don't recognize it. You don't see that like this decision is the same thing that's holding you back potentially from doing those next 5 deals, the next 10 deals or things like that. So think about that. Here's a couple other fun pictures. This was the next week when I remembered the wagon to show you this is what the wagon looks like. Here they are kind of getting pushed around the wagon, eating food, stuff like that. And it's just so easy. I'll tell you what, I put them in the wagon. I just drag them around the zoo all day. Like they're fine. And then I'll tell you, I got them out of the wagon to eat ice cream. And that was a mistake. And then I had 3 kids running around and a wagon. It was a lot harder than the backpack. So lessons learned all around, right? And here they are out of the wagon. They're like, I don't know, doing like disco dancing. And the picture after this was a huge challenge, trying to get back in the wagon. It's like getting I don't know, dogs back in a bathtub when you're trying to give them a bath. I left this one in here because I tried to find a picture of Shawn and Jenn with us on the cruise. I actually spent an hour on our cruise Facebook page trying to find pictures of all of us on our 7-figure flipping cruise in February. But here's a picture of me and Becca. I actually thought I took this out, so she's still in there. But I tried to find one of you guys. All right, here's to get to know me a little bit. 2014, I did 1 deal, made $43,000. That was my first flip that I ever did. 2015, I did another flip. I made $45,000. And at the end of that year, that's when I joined this group, 7-figure flipping. I was actually a paying member of the mastermind. And then I was able to do what Andy said, just like I talked about in the beginning, do what my mentor told me. And I did 67 deals, made almost $700,000. That's gross profit, so without expenses. But that was probably one of my best years in real estate. I only had a couple people that were working with me, and it was almost all profit. There was some marketing costs and some overhead, but not a ton. And then, you know, we doubled from there on, 135 to 1.3 million. Then we did 187, 2.4. We did less deals, did about the same amount of revenue last year. And then this year, I don't know where we'll end up. Our goal was 3.5 million, but COVID put a damper on that a little bit. I'll be the most honest person in the world. We lost $70,000 in April. April was a tough month for us. All those deals and transactions just got kicked down the road. Like, we still had houses under contract, but they didn't want to move out. They didn't want to sell. So we kept kicking them down the road. And really, like, a lot of that is still getting kicked down the road a little bit from the wholesale side for us. The retail side is a lot better, flipping and wholesaling and stuff like that. So for us, I don't know where we'll end up this year, but it'll probably be somewhere very similar to 2019. So that's kind of an idea of the deal volume that we do. I want to show you a quick video, because this tells you a story, but this next video, I think, tells you a better story about what it's all about. So give me a thumbs up, Shawn, if you guys can hear it when it comes on.
So we're down here in Pensacola, Florida. I was able to fly down here today. I wasn't sure that this was actually going to happen. With the coronavirus and everything that's going on, Military Warrior Support Foundation was our partner in giving this house away and donating this house to this Gold Star family member, Kelly. And they said that they weren't going to do a key ceremony. So when we found that out, we were bummed. We talked to her on the phone. We basically surprised her about the house, and we thought that was it. Well, they contacted us a couple weeks ago and said that we can actually come down here and have a ceremony now. So I was able to fly down from Nashville to Pensacola today, and had to deal with a couple of thunderstorms and issues, and but we made it.
Did she sing this?
No.
She hasn't?
No, she hasn't.
Hey, how are you?
You must be Bill.
I'm Bill.
Bill. Yes, it is. And Kelly.
I'm Nate.
And
Nice to meet you.
Thank you for being here. And I'm very thankful you're joining our family. The mentoring program will provide her a lot of financial assistance and training and opportunities.
Well, we get the key here for you. You can see this is.
That's going to be hard to carry around.
You can put it in your back pocket. I've been carrying it around. It's not that heavy. So this Revitalize Northwest Florida is Brian's company. So we partner with them a lot down here in Pensacola to actually do a lot of the work to fix up the house. And then, you know, us as Blackjack, so we found the house, we negotiated with the previous seller, bought the house, and then raised a lot of money to do this and donated a lot of the funds personally. And then, you know, Military Warrior Support Foundation. So it's kind of ceremonial for you to do whatever you want with, but you kind of keep it. And then here's the real key. This is the thing that actually gets you into the house. So I guess from us, what I want to say is, a couple of years ago, we had this idea to figure out how we could do this thing. And I'm more of a, like, I want to do something than a how guy. And then I kind of ask my team, like, how do we do it? And I can maybe see the finish line. And these folks that you see right here are the ones that kind of do all the work. And I just get to hand over the awesome key and what you guys have done and all of that, especially as a spouse of a military member. That's the hardest job. And people just know that. See it?
Yeah.
Let's take a look at your house. You guys ready? We got down here in time about 15 minutes before Kelly showed up, and it was just amazing.
I found out about this project because, I'm in the business.
All right, I'm gonna stop it there. It's a little bit longer video, but the premise of this is, you know, we had this vision to like kind of like make an impact somehow and do something, right? And for me, being a military member, this woman Kelly, she lost her husband in combat, and she's a Gold Star family. So if you don't know what a Gold Star family is, it's somebody who lost a spouse, a family member in combat. And so we were able to source this house. We were able to purchase it. We were able to fully rehab it and give it to her mortgage-free, 100%, just give away the house completely. We raised some funds. We got some partners involved and things like that. And it was just amazing to see. So I wanted to show you that because a lot of people think about like these big businesses and all those numbers that I showed you before, like millions of dollars of revenue and stuff like that. We probably moved like 30 to 50 million in houses through our company per year. But it's sometimes not necessarily, it's not about the numbers, it's about what we can do with it. Like what can you do with your money, with the resources, with all the people that we have, the network that comes to it and all that stuff. So that's what's really cool. And hopefully like this, the beginning here is just kind of like, I feel like people always talk about the 200 deals a year, 187 deals or $3 million and all that stuff. But ultimately, like this is the kind of stuff that we should be talking about and sharing. And hopefully it gives you the push that you might need to say, hey, you know what? I could actually play a bigger part in my community. I could actually play a bigger part. We're playing really small. And when I see people giving away billions of dollars a year, like I have a goal to give away $1 million in a year. And I'm not there yet, but I want to get there. And so that's what it's all about. Like that's what businesses do. That's what is so cool about the entrepreneurial journey that we have, that we're on, and that hopefully, like a lot of you probably have full-time jobs and you're trying to think about getting into this. But this is what I want to motivate people to do. Like, how can I figure out how to show you guys and everybody else how we can all do something like this or participate in it? So, so that's more about like our company and me than anything else. So, okay, here's the meat of the presentation. This is what you guys showed up for. All right. This is there's three different things here, right? So, and a lot of you guys have probably seen this before: technician, manager, entrepreneur. So, has anybody seen this before? If you have, drop it in the chat if you know where this is from, or you've seen these three words somewhere. And I'll give you a hint. It's from a book. It's from a book that I read. All right. So, and I'll give like a minute, but as I talk through it, there we go. A couple people are answering the E-Myth, right? So Michael Gerber wrote this book called The E-Myth, and he talks about the technician, the manager, and the entrepreneur. And like the way that I look at it is, maybe you're really good at doing something. Maybe you're a good carpenter, or you're a electrician, or you work on HVAC systems, and that's what you do. And you're like, you know what? I'm a carpenter, so I should be flipping houses. I should run a house flipping business. And you might be a horrible business owner, but a really good carpenter. They're two different things. Or you could be a really great entrepreneur and business owner and can't even screw in a light bulb and still flip houses at a very high level. So you have to think about this transition that you're making from technician to manager to entrepreneur, and really see like, where are you? Where do you fit in this? So I didn't realize that I was an entrepreneur until I started doing this. I actually was going in there fixing up the houses. I was doing a lot of the work. I was actually trying to figure out how to lay tile. I was studying that. I would take a month to watch YouTube videos and read books on laying tile so I could save a couple $100 instead of hiring somebody to lay tile. And it took me a long time to realize that I'm actually trying to run a business here and not doing a very good job. So I'm going to talk a little bit about that today. So see kind of where you fit right now. You might be a technician who's like, hey, I'm really good at renovating the houses for other people, so why don't I start a business and start flipping? And it's going to be a transition for you in a totally different mindset than what you were doing when you were doing it for other people. And if you're a manager, you're really good at holding people accountable, telling people what to do. That's great too. We need those people. But you're going to find yourself along this journey. So here's a graphic example of what I'm going to talk about today. I started with the zoo theme, so I'm going to let it run through. But this is a picture to show you like hitting the ceiling. People are hitting the ceiling. So I'm sure Shawn at some point was like, he hit a ceiling. He's just like, you know what? I'm flipping 10 houses a year and I just can't get past 10 houses a year. For me, it was one. I was doing one house a year on the side, and I said, I want to do 12. Like that year that you saw 67 houses, my goal was to do 12. And I just couldn't figure out how to do more than one. It would take me 6 months just because I was in the business doing all the work, and I wasn't thinking of it like a business. But I hit a ceiling on a regular basis. Like I'm hitting a ceiling right now in my 7-figure flipping company, because we've got to build out a team. Like I've got to get out. I'm working so much right now. Like I'm working long hours. I'm putting in a lot of time, and we're kind of hitting the ceiling. Like I want to figure out how to impact and improve more people's lives and get in front of more people at our event, Impacting Lives, so we can change the future of them and their family. And I want to see 1,000 people there, 2,000 people there, 3,000 people there. And we've kind of hit that ceiling. So I've got to figure out how do we get past it, right? And this happens on a regular basis. It happens all the time. And what you have to realize is it's okay. It's actually a good thing, You're hitting a ceiling, but you have to recognize that you hit a ceiling. And it's okay. You just have to figure out what are the tools and things that I need to push through. And that's what I'm going to share with you today. The tool that helped me push through any ceiling that I hit, this one thing. So this is what my business coach, my EOS coach, told me one time. He said, you got a stool that's got 3 legs. You sit on it. It's really strong and it's got a sturdy foundation. It won't tip over, right? And so you got this peer-to-peer network, which you guys have right here in the OnRia that you guys are in, like this group, right? You might have a Facebook group. You might have another mastermind that you're in. You might have accountability partners that you meet with and talk to and things like that. But a peer-to-peer network is so important. They're the people that are going to answer your questions. They're the people that are going to jump in and help. And then you got to have a system, not like multiple systems that you run your business off of, but one system. And I'm going to share the system that I use today, but you could use any system, but just pick one and go with it. Like you need to run your business on a system. And then coaches and mentors. And I'm not like pushing mastermind, high paid coaching and stuff like that. What I'm saying is coaches and mentors are everywhere. They could be a spouse. They could be a family member, a father figure. It could be a coach, like a coach that I had in high school soccer. Is his messages are still mentoring me and coaching me to this day. Previous commanding officer of mine is still coaching and mentoring me today. Your accountants, your attorneys, all of these people could be paid coaches, like a business coach or a mastermind or something like that. But those people are so important to be able to bounce ideas, like instill wisdom in you that you need to be able to shortcut this curve. So these 3 things, you take one of these out, and you sit down, you fall over, right? You need all 3 of these things. And you really need to think about that. And this was a huge shift for me in the way that I thought. I figured like, oh, if I just get a coach, everything's fine. Like he's going to tell me what to do, or she's going to tell me what to do, and I'm just going to do it, right? But no, like even when I paid $25,000 and Andy was mentoring me and coaching me, I still needed to bounce ideas off of the other people that were in my world too, around the same time as me, my peer-to-peer network. And then I figured out, it took me a while, but I figured out I need to run my business on a system. So you don't worry, you have a system. You already have a system right now. I promise you that. It's perfectly designed to get you the results you're currently getting. So let me ask you this. Do you like the results that you're currently getting? Because if you do like the results that you're currently getting, you probably have a decent system. If you don't like the results that you're currently getting, like you're getting no results, you're not actually doing anything, you're stuck, then you need a better system. Like you have a system. It's just not working for you. And this was a huge like aha for me, is like, I actually don't like the results that I want. I want different results. So I need to operate off a different system. So this is the model that we operate off of. I'm going to talk about it a little bit today. It's a book by Gino Wickman called Traction, and it's called EOS, Entrepreneurial Operating System. It's a mouthful. So there's 6 key components here. You've got the vision, you've got data, you've got people, process, issues, and all together, you get traction in your business. Like when you put all this together, you start to see traction. And I know, like, the cool thing about this presentation for me is if you're new and you're sitting here going, this is way over my head, like I don't even have a business, this presentation is for you, okay? If you've never done anything, you need to listen to this. If you have a business that is performing at a couple deals a year, you need to hear this too. And then if you're running a really high level business, you're a full-time real estate investor, this is for you also. Because if I could go back and realize what I'm about to show you before I got started, I could have shortcutted the curve even faster. And right now, knowing how much effort and energy I put into this one thing, it changes the things that I look at. It's either a people problem or a process problem. And so we're going to talk about that today. So, okay, right here, this is my proof that if you don't have a business, then you still have these 6 key components. And if you do have a business, you definitely do. So vision. You want some future you or future business. Like you're showing up here, you're spending your time with us. And oh, by the way, if you're on some other device or you're not focused, come on back here with me. Come on back, okay? Because I'm talking to you. If you are not doing deals or if you're doing deals, I'm talking to all of you. So stay focused here. So vision, some future you want some future business, you want something, right? You're here for a reason. You're not just like wasting your night to learn about real estate. You want to do something. So you have some vision. And if you have a big business, you absolutely have a vision. Data, you have some metrics and KPIs. Even if it's the fact that you show up to this call and then you turn it off and you do nothing afterwards. So you write into your key performance indicators, what did I do after that call? 0, right? You want to get that 0 to something. So you have KPIs and data and metrics. You're just probably not using them, or you might be using them incorrectly. Process, you have a process. Like I said, even when I took my kids to the zoo, I've got a process, right? Issues. We all have plenty of issues, whether you're doing a ton of deals or not doing deals. You got issues. People, it could just be you. And you might be the problem. Like you could potentially be the problem of why you're not getting started or why you're hitting that ceiling and not getting to the next level. You might be getting your nose in everything like I was. And if it's you and one other person, of course there's people problems, right? And then traction. You have some traction. Like even if you're not doing anything, you have some traction. Like you're moving a little bit each time. Each time you get a little bit of experience, each time you show up to these things, listen to somebody, you have a little bit of traction, okay? And so you got to start measuring that stuff. So here's what we're going to focus on. We're going to focus on the people tonight. So right people, right seats. I'm going to take a quick drink. All right. Let me ask you this. Have you ever said this? I am wearing many hats. Oh, wait a second. Hold on. Andrew just said traction book equals ordered exclamation point. So I'm going to pause this presentation and I'm going to throw out a big caution and a big warning to all of you, okay? Here's the deal. If you're at a place where you need to read this book, Traction, great, read it. But if you're not at a place, like wait till the end of this presentation, see if it resonates with you, and then you decide whether you order it. I was a guy who read 50 books a year for a couple years. My goal, I was like, I got to read 50 books a year. I got to read 50 books a year. I'm a CEO. I got to read 50 books a year. I'm not a CEO. Like I am an entrepreneur. I need to read like the one book that I need right now as many times as I need to get that thing done, get it down and get it rolling. So like wait till the end of this presentation to order books, please. And then decide, because I'll tell you, if you're an engineer like me and you really like equations and systems and processes and stuff and like textbooks, if you want the textbook for EOS, order Traction. If you don't want the textbook, and maybe you're like an English major or you really like art and stuff like that and crafts, and you just don't like textbooks and math equations and stuff, then I've got another book for you called Get a Grip that they wrote. And that is more of like a fable, a story about a company that implements Traction. And you can actually see it and hear it. And I'd recommend listening to it. It's a very good listen. It tells a story and it takes you through the process so you can understand it a little better if you don't like reading a textbook. So I look at Traction as a textbook. I look at Get a Grip, the same kind of concepts, but it's a little bit easier to digest if you don't really like you're not like a big scholar and love textbooks. So, okay, there we go. I'm off my, so Andrew, you might want to cancel it, or maybe you're like, yeah, I would just order 2 because this is exactly what I need. So, all right. Okay, now back to your regularly scheduled presentation about EOS. Wearing many hats. Have you ever said like, I'm wearing too many hats, like I'm just so busy? Everyone's running around trying to do everything. And no one is accountable for anything. You don't know who's accountable for this thing. Like we're all kind of like pointing at each other saying, oh, I thought you were gonna do it. I thought you were gonna do it. Or ever said too many cooks in the kitchen? Like, hey, we got just too many people and cooks in the kitchen. Then this is the thing that you need to look at. And this is the thing you need to diagnose. So this is my accountability chart, total eye chart. I don't expect you to see, read any of this. I put it up to show you like how my organization looks. So I've got me as the visionary. I got my integrator, my COO, I got my executive assistant. And then we've got a marketing department, a finance department, a director of operations, sales manager and director, systems director. And then there's people under them. But this is just an idea of what it looks like. I'm going to show you a simplified one next, okay? But this is just to give you an idea of how a company could be set up. And I'll talk a little bit about what it is. So here we go. It's an organizational chart on steroids. So if you work at some corporate job right now, you probably have some sort of org chart. This is like a really incredible org chart, and I'll talk about it a little bit. Single point of accountability. Remember we said, you don't know who's accountable for that thing. Well, you can look at that chart and say, that person's accountable. I can see right there. Structures your company for success, gives the company the ability to grow, so you can develop and build your company off your accountability chart. Tool to use when you want to delegate things. So you don't know who to delegate these things to. You can use this. And then what to delegate to them. Like, you know, a lot of times you sit around and you're like, man, I just wish I could give some of this stuff up, but I don't know who to give it to, or it's actually more work for me to give it to that person than it is to just do it myself. It enables strong flow of communication. You know exactly who's talking to who, and there's no crosstalk. Like if it's up and down, it's up and down. It's not across the accountability chart. It identifies issues in the company easily. That's what I love. Remember, people issue or process issue. A lot of times your process issue, you think is a process issue, but you can go to the accountability chart and say, you know what? I don't think that person is in the right seat, or we got the wrong person there. And we're going to talk about that in a second. So, all right, here's what we got. this is a like very easy accountability chart for a lot of you if you're a flipper, wholesaler, or something like that. This is kind of the somewhat concept of a wholesaling chart that I would say. You got a visionary, you got an integrator, you got a lead intake person, somebody who's answering the phones, doing callbacks, follow-ups, office manager type person. You got somebody who's doing sales, so they're negotiating the contract. You got a transaction coordinator, and you have a finance manager, so somebody who's doing bookkeeping and finance, sending wires or receiving them, things like that. So this is just an example, right? And at the end, I'm gonna come back to this exact chart, and if you have a big business, you might have people in all these different seats. If it's just you, I'm gonna tie it back in a second. So here's some symptoms of a weak accountability chart. You don't have one. That's a good symptom. You can't find the time for important tasks. Like you are just busy all the time, and you can't get the big things done that need to get done. You don't have a team in place. It's just you, or maybe it's you and one other person. You're not sure what the team should look like who should be on the team and what should it look like. You're inconsistent. You might like do a deal, then get focused, and then come back out and say, oh, I don't have another house to flip. Like, what's going on? We just closed this one, and now we got to work 3 or 4 months to go find the next one. You're inconsistent in the things that you do. You're doing everything yourself. This was me. I was doing everything myself. You're not sure who to hire first. This is the biggest question that I get all the time. If you had an accountability chart in your business, in your company, even if it's just you, you would know who you should hire first. And that's where I'm going to go in a second. So here's how to create one. Define the right structure and the seats for you. So define the structure and the seats for you and your company, or your future awesome you and your future awesome company. Customize your company's chart. So if you have one, like it's for you. If I took Andy's and Mike's and all my other kind of peers and mentors in my mastermind group, and I grabbed all their accountability charts. At first I was like, can you just give me your accountability chart? Like you run a wholesaling, Andy, you run the company that I want to run, just give me your chart. And fortunately he said no, but it just doesn't work that way. Like my chart that I showed you, the reason I showed it to you is because yours is going to look totally different than mine. Even if we do the exact same thing, that's my chart. It's set up for us and the way that we operate our business. Yours is going to look different. They all look different. So customize your company's chart. Clarify the roles and responsibilities for each seat. So each seat should have 3 to 5 roles and responsibilities, like the 20% that they do that produces like 80% of the results. Like what are the really big things that they're doing, right? And clarify the roles and responsibilities in that seat. It's not a job description. It's not the 50 things, the tasks that they do. It's big things like follow up on leads, like answer the phone live. Like what are the big things that these people are doing in that seat? And then get the right person into each seat. So a lot of times you hear right person, wrong seat. So you might have a really great fit that I'm going to talk about in a second, but they're sitting in the wrong seat. They're doing something that it's not in their superpower. And then you've got the wrong person in the right seat. Like they're really good at what they ever had somebody who's like, man, they're awesome at their job, but I just can't stand being around them. Like they just don't fit my values, my culture. Like, oh, it's horrible. Like that's the wrong person. And we'll talk about that. So, and then you got to repeat this as you grow. So you might, like my chart did not start out looking like that crazy thing you just saw, right? It started out looking more like, you know, a 5, 6 person, 5, 6 boxes, just like the first one I showed you. That's what it looked like. But you got to repeat that. As you grow, you start moving around the tiles and building it out and saying, okay, we need some support over here. Then we need some support over here. Hey, you know, sales team's dropping the ball. We might need some help over there. Marketing team is not doing what they should be doing. What's happening? Oh, well, they're understaffed. We're having a problem. They're maxed out. They're at their capacity. Okay, we need to add another seat there. Maybe get them assistant. Maybe bring in somebody else next to them. Is it somebody that answers to them, or is it somebody else? So let's go back to this. And this was the big aha that I had to have. So if I could go back to when I started and I could build out my accountability chart, it was just me doing everything. So if you're running around doing everything right now yourself, you're answering the phone. Let's just take a wholesaling company. You're doing the marketing. You're answering the phone. You're going on the sales appointments. When you get a contract, you're sending it to the title company. You're marketing for the buyers. Once you get a buyer, you're getting them to sign the contract. You're sending that to the title company. You're setting up the times. You're communicating. Then when the wire closes, you're doing the books. You're getting the money. You're taking the check to the bank, right? You're doing it all, right? And at first, that was me. I was doing it all. And I just thought that was me doing it all. Like that's what it was defined as, right? There wasn't a company. It was just, this is what I do. I flip a house or I wholesale a house and I have to do everything. But if you really break it down, you could take all of my tasks that I was doing at the time and put them here, right? Put those 3 to 5 things in each of these boxes. Like, I'm the visionary. I'm looking at the future. Where do I want to go? What are my goals? I'm the integrator. I'm the one who's actually getting things done. I'm holding myself accountable to answer the phone, to go on the appointment, to do all that stuff. So I'm in that box is doing these things. Lead intake, I was answering the phone. I was doing follow-up. I was putting information in the CRM. Sales, I was going on the appointments. I was negotiating. I was filling out the contract. I was uploading the contract in the CRM and all that stuff. Transaction coordination, I was talking to the title company. So if I could take all those things and put them in each of these boxes, those are the tasks. And then what I would do then is put my name in each of these individual boxes. And so the next step at that point is, which box do I hate the most and which box am I the worst at? And if you want to figure out who to hire first, just do that. Like, if I could have just put my name in every single one of these seats. And by the way, when I hired my COO, his name was in 5 of our seats. He kept firing people and putting his name in there. People kept quitting and he had to put his name in there. Like, somebody's got to fill the seat. It can't be vacant. So I hate answering the phone. When my phone rings, I don't want to answer it. I can't stand it. So that was the first one that I took my name out of the box. But remember, 5 years ago, 6 years ago, I wasn't doing this. I didn't know the secret. So you guys do. So put your name in all those boxes and then figure out what do you love to do when you show up, what are you smiling about, and then what don't you love to do. So I'm going to give you some quick hiring advice, because I think the next step for a lot of people is, okay, well, I actually do need to get out of one of these boxes. So how do I do that? So determine your core values. Like, don't skip this. Everybody skips this. I'm telling you, I spent time Shawn was at Flip Packing Live last year, and I made them kind of break out the notebook, sit down, and actually try to build out their core values. Every single person in my company knows my core values: extreme ownership, stewardship, hardworking, integrity, personal and professional development. If you stopped any single one of them at the event at Flip Packing Live last year, they should have been able to tell you that right away, without hesitation. And anybody from, I don't know, we don't have janitors, but it's just easy to use janitor. Hopefully nobody on the call is a janitor. If you are, great profession. But the CEO down to the janitor, they should all know those core values. That's it. And that's the sign of a really strong company that is built on a foundation of value. And so don't skip it. It's very important. Culture eats strategy for breakfast. I love this quote by Peter Drucker. Like, culture eats strategy. Everybody wants the tactics, the techniques, the goal, the silver bullet, the thing that's going to make them a ton more money. This is it. This stuff is it. Like, the core values and the culture, that's it. You build that, even if it's just you and one other person, like you and 2 other people. It doesn't have to be a 20-person company like mine. It can be one other person, but be around people that share the same values as you, and you will go a lot further. So here's some hiring advice based on the accountability chart. Determine what the roles on the accountability chart are that we talk about. So what are those roles? Those 3 to 5 things that they're going to do. Figure out what you're good at and what you're not good at. So what are you best at? What is your superpower? Where should you sit? And I'll tell you right now, if you're building out an accountability chart for a flipping, wholesaling, I don't know, it could be anything, a land development, Airbnb, money lending company, multifamily business, whatever it is. If you're not going to sit in the visionary seat, then you're going to need to go find a partner. Okay. You got to find somebody else that can sit in that visionary seat. So it's not like you fill this out and you figure out, like, I'm the best lead intake person possible. I'm going to go find an integrator and a visionary and all this stuff. Like, you're going to have a problem. Like, and eventually you might reach that ceiling and say, you know what? I just can't I can't think any bigger than this. And you might need to bring somebody in at that point to come in and be the visionary. And that's not necessarily the end of the world, but don't think you're going to put yourself in like lead intake or sales or things like that. So figure out what you're best at and not good at. Open up a spot in the accountability chart. Like I told that story, I opened up that lead intake spot. I guess like that's what I would do if I was building a business today by myself, right? At that time, I was just like, I just need help. I'm just going to hire somebody. Answer the phone. I hate answering the phones. Go do it. And that's what we do. We have all this stuff, right? Here's what happens. You have all this stuff and you're like, I'm doing all this. Okay, I'm going to hire somebody. Hey, can you just take half of this stuff? Just take half of what I'm doing and I'm going to go do the other half, okay? I don't know what your roles and responsibilities are, but you just go over there and you do that half of the stuff and I'm going to do this half of the stuff. And then if you have a problem, just come see me and I'll figure out if I want to do some of that stuff and you do some of this stuff. Like that's what most people do, right? That first hire is like that. Can you imagine if you could build something like this out and be like, this is defined, this is your seat, this is where you fit, I'm holding you accountable to those things. It's very hard to hold people accountable when you're like, I actually don't know what I want you to do. Just like kind of go over there and do some stuff, right? And so this is so much easier and cleaner to do it this way. So open up a spot. What kind of personality profile is needed? I definitely don't have enough time to go into personality profiles, but there's a lot of free ones, cheap ones, DISC test, Colby, Myers-Briggs. We use something called Culture Index. There's predictive index. There's all kinds of different things, paid services that are really expensive all the way down to free resources. You could even probably use like Enneagrams and stuff like that too, like all this stuff. But figure out like the characteristics that are needed for that position. And it might be somebody who needs to be able to do one task over and over and over again and not go crazy, right? And there's a personality for that. There's people that are like that. They are fine. They just want to clock in and clock out, and they just want to do their job, and they don't want responsibility, and they don't want to be the boss. And so that's okay. So find that out. And then what kind of skill set is needed for that role? So if it's a salesperson, they got to have a sales background. Like I want them to have a sales background. It's pretty rare that somebody can come in that has never sold anything before and just be a rock star salesperson that buys houses for me. And then write the ad. Here's the tip. Write the ad to the personality, not the job description. So don't write your ad for a salesperson like, you'll be going in 10 to 12 houses per week. You'll need to wear pants because you'll be bitten by fleas. You will likely go into houses that are filled with hoarders. They stink. Wear a mask. Actually, that might be pretty common these days. But bring a respirator, and you're going to be taking pictures of houses and driving all around town, using your own gas because I'm not going to pay for it. Like stuff like that. Like don't write the job description, right? Right? Like, are you a self-motivated individual who wants to earn, like who deserves to write their own paycheck? Like things like that. Like, do you hold yourself accountable? Do you hold yourself to a high standard? Are you extremely competitive? Like you want somebody to read that and go, that's me, that's me, that's me, that's me, right? That's me. And then they'll jump in and put in an application. You don't want somebody to be like, oh yeah, fleas, I like that. I can go into some houses. Hoarders, yeah, I watch those shows. Stuff like that. Like you want people to feel it and be like, I want this job, not just resume drop on every sales position that's out there and wait for somebody to call them back. And then compare apples to apples. This is my last bullet. So the biggest thing for me is when we hire somebody, we compare apples to apples. And this took me a long time to figure out. I don't necessarily know the Canadian reference here. Usually I present this to, I use American football. But we won the Grey Cup one year when the team was in Baltimore when I was growing up. So I do know a little bit about CFL. I just don't know the teams anymore. So just imagine a team that you really like in sports. It could be soccer, it could be football, it could be whatever. Hockey, I think hockey's really big in Canada, right? So you pick your favorite hockey team and say like, okay, you are interviewing someone and they say, you just start talking about sports and you ask them if they've ever played any sports and they're like, oh yeah, I played hockey. And oh, what's your favorite team? And they say your favorite team and you're like, oh, that's so great. And you start talking about that. Next thing you know, you've taken the interview questions and thrown them out the door and you spend another half an hour talking about hockey and how great you guys are getting along. And you're like, this person is awesome. And then you get on the next call and you're going through the interview questions and you're like, okay, asking the questions. They're like, hockey, what sport do you play? And they're like, I never played any sports. Like, I don't really, oh, you watch hockey? No, I don't really like hockey. And you're like, huh. You just go down through and ask all the interview questions, right? And at the end of those two interviews, if you're looking at them, you're probably like, okay, I really think that I should hire the person that I love. Like, we have this connection. I really liked it, right? You're not comparing apples to apples. You didn't compare their skills. It might be some of the culture stuff, but you pretty much didn't even ask that other person any of those questions because you just threw them all out and you went rogue, right? And so we do this all the time. We're comparing apples to oranges when we're hiring people and interviewing people. So this is the key, like really compare apples to apples, stay on script. You can talk about hockey and sports and what, place you hang out and all that stuff. That's fine. But you really want to compare apples to apples when it comes to this stuff. So I think that's all I got. So I made this check a little bit ago when I started doing this presentation. And I want to give some context to the $487,000. So what I did over the last 5 years of all the people that I hired that didn't work out, I basically just took their annual salary. I just took the 1 year salary that we paid them. And we probably paid some of these people like 3 years, 4 years. And I added it up and I got $487,000 and some change. So I rounded it down. And, but these are the people, these are like the wrong people that I hired because I didn't set this up the right way from the start. Like if you set this up and you set this concept in your mind that you're actually building a business, even when it's just you, then you can build it right with the strong foundation from the beginning and you can start right from the start. Like right away, you'll build this thing. So I implore you guys, I'm going to require you guys all to think of this like a business, even if you're just trying to do a side hustle in the beginning and you're trying to just to go from never doing a deal to doing your first deal, whether it's a wholesale deal, a flip, your first rental, a multifamily building, whatever it is, like anything in Elizabeth's presentation, right? Any of those things, it's a business. If you look at it that way and you start building it out with a foundation and a structure, then you'll be strong from the start and you'll skip a lot of the problems that I see. I mean, people pay a lot of money to join our mastermind group and see this one thing, like they just don't realize that they're building a business and they think it's just about flipping houses when it's not. So, all right, I don't know. You guys can tell me where you want me to go from here.
Yeah. Do you guys, first of all, amazing. That was fantastic content, Shawn.
So, we were talking about Flip Hacking Live and the expectations were we got out of it. So if you can imagine, just to the people that are on here, if you can imagine, this is one of the presentations out of 3 days of presentations, right? So, whatever you glean from this, the nugget, save $487,000 from your business just from this one thing. If you can times that by 24 speakers or whatever you have over the 3 days, like that's what it was for Flip Hacking Live, and that's what it's going to be again, virtually. So it's unbelievable. Like amazing presentation. That is kind of like where I was last year, trying to do that accountability chart, and you did that as well. And we went through that entire thing. That's what I got out of it, right? And we've been struggling with that since the start when we started getting bigger.
Well, and funny enough, so we'll ask first of all. Well, we'll ask next if anyone has any questions. But what Shawn was saying when he came back, and he said, there's this presentation. We need to do exactly this. We took your accountability chart, your organizational chart, and implemented it. And what happened?
Didn't work.
It didn't work. Because it's so true. It's all like, it's going to be different for every one of us. Yeah. So that was awesome. Definitely need a system, but it's so true that everyone's system is going to be just a little bit different. So, and
then like Bill said, when we started tailoring it to what our needs actually were, then we were able to start building it out, right?
Yeah. So Bill, do you mind, are there any other questions, anything that's come in, guys, anything
so I'm looking at one, somebody, I'm going to butcher this name, Natalie, might be Natalie, but it's Nathale. So said, I don't know where to start and how to start flipping houses in Ontario, but this has been a very big goal of mine. I just feel so overwhelmed. So the one thing that I want to share with everybody, like this is a common problem and question, right? Like, how do I get started? I feel overwhelmed. It's information overload. I don't feel like I have enough experience to get out there and do it. I remember that the first rental property that I bought, it was a short sale. So I had to put in, an offer that was lower than what they owed to the bank. And the basement was unfinished. It was kind of like, I just wasn't sure about it. And I said, you know what, I'm just going to go. Like, I'm just going to go and I'm going to figure it out along the way. And I put in this offer, and actually the realtor brought it to me and said, hey, it's already been accepted, but the people couldn't get a mortgage and they canceled. So you can slip in here and probably close this thing in like 30, 45 days. And normally a short sale takes a lot longer. And I did. And I was in a little bit over my head. Like, to be perfectly honest, there's a 1,000 square foot basement that I wanted to finish. My wife was pregnant with our first son. And I just jumped into that rental property. It was like, we finished the basement in 6 weeks. And the only thing that I didn't do is I had to call my uncle down to help me with the framing. And then some of his friends did all the sheetrock, because I do not do sheetrock. I'm so bad at, I don't know, drywall. You guys call it sheetrock up there? Drywall. It's like and looking back, it was like, I was way over my head, but I figured it out. And I think like taking action will trump getting into this loop. The loop is decision making. Like I just did a podcast with a poker player, and I asked her about this, like analysis paralysis, like why do people stop? And she's like, people are fixated on the fact that the outcome has to be 100% positive. It has to be a win. And if you get stuck on the fact that you have to make money on your first deal, and you're not going to accept any probability. So she said, her exact quote was, if you put a gun to my head and tell me that I have to make money on this house, then I'm going to do as much research and I'm going to spend as much time as I humanly can, like as much time as possible, to get everything perfect, to make sure that my odds of winning are, because I'm going to die if I don't make money on this house. Then I'm going to get into analysis paralysis. Like, I'm just going to go analyze everything. But if you just tell me that you have to win at this game, and I know that if I'm 80% certain that I'm probably going to make money on this house, and then I might just go do 2 or 3 of those and make sure that all these things are fitting my criteria and I'm controlling and making the best decision that I know possible at that time, then the outcome is never fixed. So if the outcome's positive, like if I make money on the house, then I think that I made good decisions. And if I don't make money on the house, so I just say that I made bad decisions. But it was really crazy when she said, you could have made a good decision, but other things happened to make the outcome a loss. So it's not always our fault that we lose money. I've lost money on houses, plenty of them. And I would say, looking back, I always thought it was our fault that we did. But there's a lot of other factors that are involved that were out of our control. We didn't have the information that we needed at the time. So what I'll say to you is just go out there and go. Like, take some action. The best education is doing, if you do it. So like, there are a lot of resources to help you skip the curve and stuff like that. But I will say, like, sometimes we just got to go out there and do it. And the outcome is not fixed. Like, the first thing that this woman asked me was, what percentage of houses do you lose money on? Like, the second that I showed up on this call with her, and then we talked about that for like 20 minutes. It was just cool to, like, she's like, I know that you lose money on a certain percentage. And so it was interesting to think that, and we do, and we will. And so sometimes we get stuck in this because we have to have the perfect outcome and we're trying to control everything. Like, we don't control everything, but we do control those actions that we can take. So I don't know, get out there and do it. Like, buy a house, buy a rental, just go. Like, don't get stuck. I know it's easier said than done. And I was in there too. Like, looking back, it's totally normal to be uncomfortable, and that's okay. I would say don't get into a situation where you're massively uncomfortable and you do this huge deal that has the potential to make $400,000 or lose $400,000. What I would do is start get my feet wet, get started. Maybe, get in with somebody else that knows what they're doing. Figure out some other things. Like, how can I kind of ease into this? That's what I did. I bought a house, I got it going, and then I was like, okay, that one worked. I'm going to do one more. And then that's when we started kind of taking off. So I don't know.
Absolutely.
Yeah, we see that a lot. People jumping around from seminar to seminar and just going, doing the circuit and never taking the action to actually start. You just have to start sometimes and get that momentum.
Go in with the expectation that you're going to make mistakes. Like, that's going to happen. So I think what you said, just start on the smaller scale, maybe partner with someone that knows, have done this a few times. That can sort of ease your anxieties a little bit. But at the end of the day, you just got to do it.
Yep.
Questions?
I don't think so. Did you see any other questions pop up? I don't see any in.
No, but hey, I wonder how many people on here don't have tickets to Flip Hacking Live that want them. So how would you feel about doing like some bonuses for tonight or for you guys for a couple days or something?
Yeah,
that sounds amazing. Sure.
Okay, so I tell you what, if you guys grab a ticket to the event, like, I'd really love to have you at the event. I'd love you guys to check it out. So if you guys buy a ticket through their link at the event, I don't know, Shawn, we'll put a time on it, but we'll throw in a bunch of bonuses for you guys. And then if you guys are like following Shawn and Jenn and you guys already bought tickets to the event, then just let me know and I'll figure out how to get you guys the same bonuses. So I don't want you to feel like actually the ticket prices have gone up a bit, haven't they? So you got some benefit, but we'll hook you up. We'll take care of you. Like, I don't care about this stuff. We'll figure out how to get you some bonuses. Shawn, I don't know if you want to email it out to your list or put it out there, but we have the previous 4 years of event recordings that we've done, and I actually handpicked like the ones that have lasted the test of time. So 2016, 17, 18, and 19. And I just kept those ones in there. So I went through specifically and only included the ones that still make sense. So we have like some of the strategies and tactics that we used in 2016 don't necessarily work anymore, right? So we removed all that stuff. So you don't have to waste time going through like 20 presentations. There's, what's in there is really good for you guys. And then we've got some training on subject to and seller financing and stuff that we'll put a membership site together for you guys. So let's do, what's today? Thursday? I don't know. Maybe we'll do by the end of the weekend. Is that okay?
Yeah,
If
that's
they buy
great.
by like Sunday night, we'll give you guys all those bonuses. We used to sell the seller finance training for like $1,500. So if $397 is too much for that, like that alone, I want you to go to the event. Like don't buy it just for the bonuses, but it's really good stuff. So we'll do that for you guys because yeah, if I'm gonna spend time here, let's make it. Let's give them a reason to. Let's give them the I don't know, the impossible offer. You can't say no to this, right?
Yeah. Well, I mean, the ticket price itself is incredibly cheap for what you get out of it, and to get these bonuses, that's amazing. So we dropped, actually, we have the link for the ticket sales in the chat box, and then we'll email it out as well.
Yeah.
Awesome.
Fantastic. Well, everyone, thank you so much. It looks like we still have pretty much everyone that started out with us has hung in there with us. So sorry it went a little bit over, but I think you would all agree it was well worth your time tonight. Once again, thank you so much to our speakers tonight, Bill and Elizabeth. Just a reminder, I do have that ask. So if you got value out of this evening, please head on over to our Facebook page, like it, give us a good review. We want to encourage more people to take advantage of, connecting and hearing. And oh, someone had a question. Hang on a sec. Sorry, I am a massive squirrel.
Somebody said, is there a discount code so we don't pay $397? No, $397 is how much you need to pay, but I will throw in $7,000 of bonuses for you guys. How's that sound? Like,
sounds pretty darn good.
I want you guys to have, I know it says like promo code or something like that. We don't have promo codes. The only promo codes that I do give out is if we do offer these bonuses for some other people. So you guys have already got the best deal. Trust me. Buy through their link. They're running this group. They're supporting all this stuff. Every time I see a promo code, I Google it and I'm like, can I find 10 or 20% off of this thing on the internet? You can go to the sites. I don't think they have a coupon code for you. But look, hey, here's another thing. I'll tell you what. If you go to this event, you go to these 3 days, you take notes, you spend the 3 days with us, and it's not worth $397. You can email me personally. You can email info@sevenfigureflipping.com. It comes to me and my team, and I will personally, like myself, I will write you a check for $397. That's how much I believe in this. Like, it will change your life. If you're a huge real estate investor, you need to come. If you're brand new, you need to come. Like, this content is for everybody. There's a ton of mindset. There's a ton of business building. There's a ton of just it'll change the way that you interact with your family, with your community, with your church group, with your team, with your staff, with other people. I don't know. It's hard to explain, but I believe in it so much that I just want to I want to give this opportunity to every single person that I talk to. And sometimes I just want to go like, just get your ticket. Like, I'll buy you the ticket and then you pay me later. Maybe we'll do that next year. Like, everybody's free. We'll put it on your credit card. It'll be free. And after the event, you can decide to cancel. That's what I'm doing next year. So look, I'm serious. I will personally write you a check for $397. And I guess one thing to mention is it is US dollars. So I know that you guys have some sort of exchange rate. I have no idea what it is. So
it's $1 million Canadian now. No, but everyone, here's the one thing, and I was actually listening to Robert Kiyosaki earlier today. He was online he was on a rant today on something, but there was a point, and he was talking about the economy and how, the economy, real estate, it's always going to do this, right? Like, that's just cyclical. But the one thing that will stay the same is the economy between your ears. That's what you need to be investing in. And, if you're looking at, something like $300, $400, $500, and you're not willing to invest in that, well, that's fine. That's your choice, but just expect you're not going to get that return either, right? So this is something that we definitely, we've been involved in this group for over the events for a couple years, within the group for a year now almost. Yep. And we can't speak highly enough about it. So we hope we see you all there. It's going to be incredible. And on that note, yeah, we are looking forward to it. I think that's it for tonight. The only other thing I want to mention is mark your calendar for next month, because we are doing another online event on Wednesday, October the 14th. So you'll have one more chance, actually, to hear about Flip Hacking Live before the actual event. But once again, thank you so much to everyone for attending. Take this, implement it, run with it. We're excited to hear what you do for what you've done for next month. Come back and let us know what you were able to implement, what you learned. And thanks again to our speakers one more time. Really appreciate your time this evening. That's it for us. Any last words, Shawn?
No, that's it. Thank you, Bill. Thank you, Elizabeth. And thanks everybody for being on here.
All right, take care, guys. Look for the replay on our YouTube page.
Right.
Yeah. Take care.
Bye, everybody.